Hello, my name is Sarah Miller, and I will be performing a financial analysis on the Hershey Company. During this presentation, we will take a look at Hershey's historical financial performance over the most recent 5-year period as compared to a top competitor, and will conclude with a decision of whether to invest in Hershey stock. Let's begin by discussing a brief overview and history of the company and the industry it competes in. The Hershey Company was originally founded in 1905 and is the legacy of its founder, Milton Hershey. The company first went public in 1927 and since has grown to have a renowned global presence. Hershey's current operations consist of 2 business segments, the chocolate business unit and the sweets and refreshments business unit. Combined, these segments make, market, sell, and distribute more than 80 of Hershey's name brands. The company's products are sold to a variety of wholesale distributors and retailers, with focus on 3 main regions: the U.S., the Americas, and its Eastern region. Of these, the U.S. is its largest market, but sales from the remaining 2 regions contribute approximately 17% to Hershey's total revenue. In total, the company markets its products in about 70 countries worldwide. Hershey also has its own retail presence known as the Hershey Experience, located in Hershey, Pennsylvania, and with additional stores located worldwide. Hershey's mission is rooted in a passion for goodness and focuses on providing affordable chocolate, maintaining a progressive workplace, and living out a dedication to helping children in need. As of December 31st, 2015, the company has approximately 19,060 full-time and 1,650 part-time employees worldwide, and has revenues of $7,387,000,000. Hershey was recently ranked 362 on the Fortune 500 list as of June 2016, which is an improvement of 14 ranks from its previous 2015 ranking of 376. The Hershey Company is part of the candy manufacturing industry, which consists of 3 major segments: companies that make chocolate from beans, companies that use purchased chocolate to make candies, and companies that make non-chocolate candy. The industry is very large and all 3 segments are highly concentrated. Demand for the products is driven by consumer taste, disposable income, and population growth. Sales are usually higher during the second half of the year due to seasonal and holiday sales. Major U.S.-based companies in this industry include Hershey, Mars, and Mondelez International. Although Hershey is the largest producer of chocolate in North America and a global leader in the industry, Mars and Mondelez are leading the industry, both with revenues at around $30 billion. The industry concentration is centered largely on both Hershey and Mars, as they dominate the chocolate candy segment in the U.S. I would have liked to perform my analysis using Mars as a competitor. However, they are not a publicly traded company. In fact, Mars is the 3rd largest privately owned company according to Forbes. Mondelez is Hershey's 2nd top competitor and is fairly comparable to Mars, which is why I chose to compare Mondelez to Hershey for my analysis. In terms of its financial performance, Hershey has displayed fairly consistent performance over the most recent 5-year period. However, the company has seen a decline in revenue, gross profit, and net income over the past year. According to the company's 10-K, this can be attributed to continued slowdown in U.S. retail takeaway, an increase in competitive activity, and poor performance in China. Hershey believes that e-commerce continues to impact their sales. Several goodwill write-offs and productivity initiatives impacted the financial results, and some have been carried over into the 2016 fiscal year. As you can see from the chart on the right, 2015 net sales decreased 0.5% to $7,387,000,000 from $7,422,000,000 in 2014, and has only seen little growth over the 5-year period. There was a slight decrease in gross profit of 2% to $4,004,000,000 in 2015 from $4,086 million in 2014. Net income in 2015 fell 39% from the prior year to $513 million. From a component percentage perspective, Hershey has remained steady and consistent over the 5 years. Although cost of revenue is considerably high, accounting for about 55% of its revenue, it has come down about 4% since 2011. Aside from this, the company's gross profit accounts for the majority of revenue, which is about 46% for 2015, and continues to increase. Despite the increase in gross profit, net income continues to decline, seeing a significant loss of about 5% from 2014 to only 7% in 2015. By performing a time series ratio analysis on profitability, we can see that Hershey's returns on sales, assets, and equity have all significantly declined over the last 3-year period. We can see that the company's return on sales for 2015 has decreased about 5%, meaning that Hershey's profits continue to decline, which could impact the company's dividends and reinvestment plans, and also result in an inability to repay their debt. Return on assets has also seen a downward trend over the last 3 years, finally falling about 6% from 15.42% to 9.35% in 2015. This means that on average for every dollar of assets reported on Hershey's balance sheet, the company has earned only 9 cents in 2015. This reflects the company's inability to utilize its assets as effectively as it could. Hershey's return on equity is also trending down and has seen the sharpest decline of these ratios, falling 21% since 2013 and about 14% from 2014. This is significant as the value reflects the amount of profit Hershey gains on its shareholders' investments. In 2015, Hershey earned 41.82% on the owner's investment, which means that on average, for every dollar of equity investors contributed to Hershey, the company earned 41 cents in 2015. The declining values in this ratio analysis reflects Hershey's slow and declining growth. Hershey proves to be very comparable to Mondelez International in a common size analysis comparison between the two companies for 2015. Despite Mondelez earning about 4 times more revenue than Hershey, both companies demonstrate consistent trends in performance for the year. However, Mondelez is outperforming Hershey by retaining about 18% more net income per revenue. In a competitive ratio analysis focusing on asset turnover for 2015, Hershey outperforms Mondelez. Hershey's accounts receivable turnover rate was 12.35 compared to Mondelez 9.21, which means that on average, Hershey collects its receivables in about 29 days. Although this seems high, it is actually 10 days sooner than Mondelez. Inventory turnover was slightly less for Hershey than Mondelez, but was very comparable. And total asset turnover for Hershey was 1.35 compared to 0.46 for Mondelez, which means that Hershey on average generates $1.35 of revenue for each dollar of assets on the balance sheet. Stock performance for Hershey has been strong between the years of 2011 to 2014, with increasing trends in earnings per share and price to earnings. In 2015, however, the company saw a drop in earnings per share by about $2 per share. The company's price to earnings has steadily increased over the 5-year period and has reached 27.58 in 2015, which should indicate future earnings growth. Hershey's dividend yield ratio in 2015 was the highest it's been since 2011, topping out at 2.51%. This means that for 2015, the return on investment for stockholders was greater for Hershey than it was for Mondelez by a little over 1%. In the chart, we can see a comparison of 5-year total return among Hershey, Mondelez International, and the S&P 500 index. The chart is based on the assumption that $100 was invested in each of these on December 31st, 2010. From this, we can conclude that Hershey has historically held a strong performance over the market index growth, but has recently seen a decline within the past year. Although Hershey is still outperforming the market index, Mondelez International has a strong lead over Hershey's growth. In conclusion of my financial analysis, I would like to state an overall assessment of Hershey's financial performance. Although Hershey proved to be very comparable to Mondelez International, I do not believe that Hershey is outperforming their competition. Despite Hershey's strong stock performance in the past, increased price to earnings and dividend yield ratio percentage, Mondelez still shows more stock performance growth over Hershey. While Hershey outperformed Mondelez in the areas of accounts receivable turnover and total asset turnover, I believe that the true indicator of Hershey's performance falls on their declining revenue, gross profit, and net income. In addition to this, Hershey's ratio of profitability, including earnings per share, is consistently declining over the past 3-year period. For these reasons, I would recommend to not invest in Hershey's stock at this time. As Hershey works to reestablish itself after poor performance in China and several productivity initiatives, as stated in their most recent annual report, I would recommend to wait and continue to evaluate the company's financial performance over the next year. Recently, there have been discussions regarding mergers and acquisitions and even speculation of buyouts surrounding the Hershey Company, which is another reason why I would recommend not investing at this time. This concludes my financial analysis on the Hershey Company. Thank you for watching.